Right, hello everyone. So now we move on to manipulation areas. So these are the grey areas I use on the chart. They are just areas that show concentrated fake outs and retests of that area. So the manipulation builds up. So let's go to a bit of drawing quickly and just get rid of all of that from the previous one. So manipulation happens on all time frames. Obviously, the stronger the time frame, the stronger the manipulation, because the more volume is needed to move price. So you have your consolidation. This is the basic template, or whatever you want to call it. So you have your consolidation, you have your fake out, and then you have your impulse move up. This collects liquidity and creates liquidity above. Now, the more it does this, the stronger the manipulation area becomes. So that's when you see it on a higher time frame. When it does it more and more, it shows on a higher time frame. Now, this can be shown as a consolidation candle. So that is your consolidation candle, and then you have the next one, which is your impulse move. Like that, it takes the liquidity from there, then gives you an impulse move down. So that second one is a bearish candle, and this could be the one before that, could be either a bullish candle or a bearish candle. It doesn't really matter, it just shows you the consolidation. And that is the same as this pattern here. This middle bit running along there is your grey area. That's your area where the trades are coming from. That's your accumulation area. So the more it does this, like that, let's say that, this would be your main consolidated area running along there. And each time it does a fake out to collect liquidity, it builds up more and more power, because to make that movement is putting more volume into the market, bigger orders being put into the market. But most of the time it all stems from that middle bit running along there. So a manipulation area is just that middle accumulation within all of those fake outs. Now let's go to the chart and I'll show you what I mean. So we're going to go to this chart, and we'll go to the higher time frame. So you can see here on the higher time frame we have this big accumulation here. So this is your grey area. This is what I had labelled up from previous days. Let's just move those. So let's focus on these two manipulation areas. So this is your accumulation. Push up, collects that liquidity from here, then gives you an impulse move down. So this area is a manipulation area, but it also is the start of the downwards move, and then you've got an impulse move up. You even got a retest here. So this area becomes significant because you've got retests and you've got that main area that the fake outs are being performed from. So when price comes back to it, it's likely to use that area as bullish support if it's likely to continue up. And you can see in this scenario, it does. So you can even drag that along like that. So it's retested because there is major orders being accumulated in that area. So you also have one here running along there, and this is within this big consolidation thing. So these would be shown on the smaller time frame. So at the moment we're on the 4 hour. So let's go down to the 15-minute time frame and go back to that area. See, let's do the 30-minute actually. You'll see it a bit better. So that is this move here. So this is how it looks on the smaller time frame. You've got your consolidation. These fake outs are normally performed during the New York session. And you've got a nice radical impulse move down there. You can see that was with the news. So within that manipulation area, you're getting news release, which is showing high volume, and it pushes all the way down to take liquidity, then continues to buy. So that sort of price action is what you want to be focusing on. But when you go to the higher time frame, it will show you just simple candles like that. Then you got this big one here we can go over. So at the moment you can see how it's being used on the 4 hour, we don't need to go down any lower. So this is consolidation, fake out, impulse move down, which is retesting bullish support, which is a previous manipulation area. It's collecting liquidity from here, and then you get another impulse move up, comes back down, retests that manipulation area many times, creates liquidity above, comes down, retests that bullish support again, collects this liquidity here, returns all the way back to here, retest that a few times here, and then we get a build up from here showing bullish power, retest it one more time, and then we continue up to collect the liquidity above, and it's all being stemmed from that area. So you'd have this area labeled up on the higher time frame, but then go down to the smaller time frame to wait for those key times. Let's just go back. Let's just look at the times here. So this is London opening, pushes up, comes back down, with the New York opening. So they're pushing price back down like that. What's this one here? So this is the New York opening. They push from that area down and then inject it to the upside. So they're pushing down to a discount buy area, collecting liquidity, then continue to buy. And it normally comes from a manipulation area. So that is what manipulation areas are used for. They're just used for an area to inject volume into the market from. So when you get to the high volume time, so news or the New York session, they will move to these areas and use them as bullish support or bearish support, whatever you want to call it. So it's just used as an area to move price from, and that's all we do. We label up the manipulation areas, we label up the liquidity pools that are very clear, and normally when you get a move like this, bullish move up, it's normally taking liquidity, retesting the bullish support, and then getting a nice upwards move. That's why we had a few of these upwards moves, very clear, following a nice, easy, constructed trade setup. Yeah, and that's all they're used for. Now, price can come into a manipulation area and it doesn't have to reject straight away. A lot of the time, like this one down here, you can see price comes in, it'll wick about in that area and it will show confusion. And that's just accumulating orders within that area. They're just getting their positions in place and they're confusing people. Then you get the nice easy moves where they move away and then move back. And that's just releasing those orders to go in a certain way. So you release the sales here and then you exchange them for buys from that manipulation area. So don't use them as support and resistance in the sense that you expect price to react exactly off that level. It's just an area for you to focus at the high volume times and watch what price is doing within that area. Hopefully that makes sense. That is manipulation areas. I do have other videos on manipulation areas on the YouTube channel. Feel free to message me if you have any questions. Links all in the video description.